Facebook. Hello, everybody. Welcome back. None of you so far.
None of you.
Just going to run through the routine really quick because I know you guys know what to do. If you're interested in buying, there's a phone number here you can text. There's a link up top. You click apply now.
Okay, so people started now.
Welcome. Come on in. Welcome. Come on in. Hollywood's in the house. Lubbock's in the house. Maria, Cake Boss Lady, Diana, Trina, Robert, Be Kind, welcome. Dade Powell, welcome.
Why are they here? They're leaving.
Guys, welcome. Roger, welcome. Jay, welcome. Okay, here's what we're doing. We're here for home loans and financing. So if you're interested in getting yourself a home loan, what you're going to do is you're going to call one of these phone numbers. Text the number, call us. We're here to answer your questions about real estate, buying and selling. What's up, Clips? How you doing? All right, so what's going on in the market right now? Chris and Lee make bands. We try, man. Economy's tough, but we're going to do what we do. We're going to help people get into homes in 2024. We're going to help them with financing and answering questions about their either income, credit, or assets. So there's something called the Chris and Lee 1, 2, 3. And here's what it is. The first thing is, and Clips, you're the copywriter. First thing is income, okay? Income. You have to have income for 2 years in order to get a home loan. Second thing, assets. You need to have down payment and closing costs. If you don't have that, we have programs to cover it. And third thing is credit. You need a 580 or better credit score. So if you have those three things, what you're going to do is text this number or go to the link up top to apply now if you don't want to talk to us, if you're at work right now talking to your boss. Or you can reach out to either one of us via this method.
Kind of bad news, though, guys. Kind of bad news. The notes came in off the Fed, and they're not good. CPI did not come in the way we wanted. Instead of 2.9%, it came in at 3.2%. Things are not looking good. Tomorrow's a big indicator. Tomorrow's a big one. If it doesn't come in good, there are some speculating that the Fed might actually increase the interest rates. They might actually increase it. They're speculating that. Listen, I think that's a bunch of bullshit. I don't think the Fed would move up those interest rates. I do not think it's going to happen. I do believe they'll prolong the pause. So remember, the Fed, Chairman of the Federal Reserve, Jerome Powell, came out and he said, that's not him, that's Joe Biden. He said, I believe we've reached the peak of the economic cycle. That was a big, big thing. Now remember, everybody dissects their notes, what they say, everything, but it's not real brain surgery. It's just reading it and then kind of anticipating what they're doing. I do not believe the Fed is going to increase the rates. However, I've always believed that the Fed is not going to start cutting till the third quarter. And we're only in the first quarter. We're about third month in the first quarter. But there was a big speculation that they're going to be cut in March. I don't think it's happening, not in a million years. Not even Vegas thinks it's happening. Then there was more speculation. Hey, it's going to happen in May. Vegas was actually betting on May. But after yesterday, not so much. It's actually gone down to 6% that they'll cut the interest rates in May. So, some big, big, big stuff happening here. Big stuff happening here.
All right, Clips, how you doing, man? How you been? Okay, what else we got here? Ryan, rates are in the 10s. Some people are. Everything is backwards. BTS, is it still backwards? Lee, you need a copywriter.
Clips, we've already talked. I've already talked to a bunch of people. And copywriters, that's a cute profession. It is. I'm sure it's an amazing profession in Hollywood. They call them writers. They don't call them copywriters. They call them actual writers because they write the scripts for the actors and the actors just spit the lines out. I do not see a profitable version of that in what we do. If you can make a case that it can happen and we can prove it, all day long, man. I'm a old school guy. If you add more value than you cost, I'll pay you. I don't even care what it costs. If you bring me $2 million by the end of the year, I will pay you $1 million. I have no problem with that at all. I do have a problem with somebody coming and saying, hey, can you pay me? And why? Because your words will sound better. Not so much.
Kelly, if my lease ends November 1st, when should I contact you guys about applying? November 1st.
Callie, you should get your credit pulled as soon as possible. Because if you got any issues, then we can deal with it. And that way we can fix your credit if you need credit fixed. And that way you're also sitting in the back burner, thinking, hey, something could happen where I could buy sooner. Sometimes people will let you out of lease. Sometimes when somebody's renting an apartment and the apartment, let's say they rented it to you for $2,500, but in the last 2 years the market's gone up to $3,200. So you're paying $2,500, but they can get $3,200. You think they'll let you out of the lease if they can get that much more a month? All day long. So it's market driven. You should think about it.
Yeah. So what he's saying is right, Callie. So right now get pre-qualified because there's going to be a challenge somewhere. And if there's no challenge and you're still buying in November, we can work on your credit. I mean, not get you into credit repair, but we can send you in directions that'll help you get a better score by then. And what he said is spot on. If there's no renter in that unit, that's where landlords get mad, and that's where they won't let you out. But what if you did this? What if you put some ads out for your landlord about renting your property and found the renter for him? And let's say you did that in the middle of summer or sooner, and you're able to get into a house while they're cheaper. So think about that. Reach out to us. We can share with you more information about
We're here to help you get a house in 2024, answering your mortgage questions, where we think the market is going, what you should be doing, what you think you should be doing anyway.
You lend in Florida?
We lend in Florida. We lend in all 50 states, all 50 states. How many states are in the United States? 50. You know how I know? Because I said we lend in all 50.
VL Pitts. Should I refinance my home instead of getting a HELOC?
It depends, VL Pitts. If you bought your house, let's say 6 months ago or 9 months ago, and you got it at an unfavorable rate, like 8.125 in that range, and you could get in today at 7 with not a lot of cost, then it probably is better in that situation. However, if you're refinancing, you should be doing this strategically. And strategically means you've got to think about, what am I going to do in the future? I don't want to refinance 6 months and then refinance again in 6 months and then refinance again in 6 months, because every refinance costs you money and it adds time. Start your 30-year clock over again. So you should do it strategically. Navy Mom Donna, what's up? Great to see you. I see you out there on Instagram. Facebook, we appreciate you guys. And YouTube, we never get an audience on YouTube, man. Something we're not doing on YouTube.
Yeah, VL Pitts, if you want more advice on that, give us a buzz.
Yeah. What are the interest rates today? 15-year fixed, 5.75% on a conventional 15-year fixed. That's New American Funding's rate. That is not my quote to you. The only way I can give you a quote is to pull your credit, calculate your income, and then check your assets. Then I can give you your quote. But if you went to the top, our links, and you went to cool stuff, you would say today, you would see today's mortgage rates, and you would be there and you would see 5.75 on a 15-year conventional.
Andre Shutik Office. Hello, how much should we make to get a $400,000 home?
$400,000 home. If you started 90,000, 95, 100 grand, somewhere in that range, and depends on your tax base. If you're in Texas, maybe a little bit more. If you're in Arkansas, maybe a little bit less. But tax base is a very, very big thing.
Level 5 drywall. Finally moved into my new house. Closed on Friday.
Hey, congratulations, Level 5 drywall. We're glad to hear that. I'm super happy.
And then Ryan said, I know you're building my house.
Okay.
And Level 5 said, I am?
Oh, shit. You guys are having a conversation. You don't need me for this. You don't need us for this.
Yeah, what's going on?
What is going on here?
John Galt Insurance. Can you send me your loan parameters for Florida?
Loan parameters. You just call us. And we get you the loan. I don't know what you mean by parameters.
Yeah, what parameters do you mean?
Yeah, FHA is real simple.
We use cash money?
Yeah, 45, 55. I can go to 56.99 on a really good file on FHA. On Fannie Freddie, I can go probably 38, 45 most of the time. Occasionally, I can push to 50. Occasionally. So those are the parameters. 3.5% down on a FHA. If you're a first-time home buyer, Fannie Freddie, 3% with Home Ready or Home Possible, but more than likely 5%. And also the other thing is if you went 3% on a Fannie Freddie, mortgage insurance gets real expensive unless you have a great FICO score. So great FICO score that's the key to everything.
Mm-hmm.
Cool.
And John, Mr. Insurance, you do homeowners insurance? How's insurance in Florida right now? It is insane in California.
Insane.
We've quoted a couple in Florida, and because of the hurricanes, that was pretty crazy too.
It's insane. There's a bunch of carriers that left California, politics, and all of a sudden everything got real expensive. Mm-hmm. Real expensive.
Mm-hmm. What are the rules for refinancing? Do you need to wait a year? I'm going to assume after you buy is the rest of that. Miss HD Real Talk.
HD Real Talk.
So there's only one loan that really, or two loans. There's two loans that stop you from refinancing too soon, and that's FHA and VA. So FHA says you need to wait about 6 months, make 6 monthly payments, and VA actually gives you the exact day. It says you have to wait 210 days. So unless you have one of those two loans, rest of them you can do inside of a year. No problem. Actually, both of those you can do inside of a year, but the other two don't have any limitations.
Your loan officer is going to try and talk you out of it. The reason is called a clawback or a buyback. So if they got paid a commission, let's just say they made $3,000, and that loan refinances somewhere else other than their bank within 6 months, some banks will do a clawback or a buy, or they'll pull the commission back. So your loan officer will say, well, we can't do that. Technically, you probably can, and it might be better for you, but there's cost in it, and each refinance is going to cost you between $2,000 and $5,000. A lot of factors, but between $2,000 and $5,000. And if you're doing it that fast, why don't you just get a better rate up front? Your LO should have helped you.
Mm-hmm. Josh the dispatcher, $97K a year VA home loan.
$97K, yeah.
Good loan.
You're starting at $420.
Yep.
I'd say you start at $420.
Yep.
$420,000, $450. No MI, no mortgage insurance. Zero down. The only downside of a VA loan, is the VA funding fee. And that can be very expensive. If you're buying a $500,000 house and you're at the worst case scenario of 3.6% of a VA funding fee, that's upwards of almost 20 grand. That's close to 20 grand in funding fee that you wouldn't have to pay on a different type of loan. However, if you're service connected at 10% or greater, and you have an LO loan officer who knows what he's talking about, waived, it's gone.
There you go.
20 grand in your pocket, saved.
Sweet. 3 things, Josh. 1, what branch? 2, when did you serve? And 3, thank you for your service.
Yep.
In Arizona, Andy Shoke office is in Arizona.
Great to see you in Arizona. Love Arizona.
Bobby F. Is that Bobby Flay?
I don't know, man.
Am I able to qualify for a mortgage even with my wife as a liberal? I don't know, man.
That's good.
I don't know, man.
We got these people back.
I don't know.
What
state are you in?
I'm in state of confusion. How about you?
Facts. We stay
Facts.
there.
Yeah, we're in California, Riverside, California, but we do business in all 50 states. What do you got? Jay followed the host. Thank you for following the host.
John, what types of home loans?
Got
Any
questions
builder risk?
all across the board, man. All across the board.
What type of home loans? Any builder risk? So we do all the home loans.
Yeah, we broker out construction loans. We broker out a lot of, they're called alt QM loans. QM is qualified mortgage, which is defined by Dodd-Frank, the law Dodd-Frank that got passed in 2012. Qualified mortgage are Fannie Mae, Freddie Mac, FHA, USDA, VA, and a few others, but that covers most of them, and they're called QM, qualified mortgage. And they have to hit certain ratios. If you get too high, like for instance, if your fees become too big of a percentage, it turns into what's called an HPM or a high price mortgage, whole different category. So we do the construction loans and we broker them out, and we do alt QMs and we broker those out.
All right. Mariah, can I refinance from conventional to FHA? From FHA. So you want to get rid of that mortgage insurance, huh?
Yeah, Mariah, make sure it makes sense. Some people, if you put a FHA heads up against the conventional, which one would win? The answer is, what's your FICO score? That's what the answer is. If you have an 800 FICO score, conventional wins all day long.
Yeah.
If you have a 620 FICO score, FHA wins all day long. So why? Because that 0.55 is mandatory for the life of the loan. But if you have an 800 FICO score, after you add the 0.55 to whatever your rate is, let's just say your rate is 6.5 plus 0.55, your real effective rate is 7.05. And if you had an 800 FICO score and you were coming in at a 6.5 on an FHA, I could get you 6.875 on a conventional with an 800 FICO score. But if you had a 620 FICO score, you'd probably be at 7.125, which means FHA wins. So, what's your FICO score?
Ooh, good one. Loans for Airbnb?
You take it.
Absolutely. They're called investment loans. We can get you one for Airbnb. Minimum down payment's about 15%. But that's about it. So, yeah, call us. The Gabagool.
The Gabagool.
Gabagool. You know what Gabagool is?
I don't know, but
It's the meats, man. It's the
that's a good shit.
and stuff.
We got the meats. I see
It's
that
the
commercial.
Sopranos, man.
I see we got
You
the
any
commercial.
Gabagool?
Yes. Are you a direct lender? Yes, we are a direct lender. Who services your loan? Like you're setting it up for me, man. New American Funding, by and large, doesn't sell their loans. They sell them sometimes, but mostly they don't, which means we service our own loans. What does that mean? Well, after you fund your loan, you think you're with the bank you funded with, but most of the brokers sell off their loans and they sell them to a servicer like Mr. Cooper or whatever. There's a bunch of them, but they sell off their loan for servicing. New American Funding, different business model. We service our own loans.
Yeah, is that Gabagool? Is your real name Sean?
What?
As a Deeb, may you elaborate on what is a first-time homebuyer?
Good question.
Yeah, that is a very good one.
I'm gonna widen that open. So
elaborate.
First-time home buyer is defined by the program. What? Yeah. What? Yeah. So if you went Cal Haffa and you wanted to use a first-time home buyer program, you would not have to not own a home for 3 years, unless you went for Dream Ready. Dream Possible. Dream Possible?
Home Possible.
Home Possible. Unless you went for the Home Possible
Ready.
program. Home Ready. Unless you went for the
Dream for All.
Dream for All. Dude, unless you went for the Dream for All program, that's what I'm looking for. Unless you went for the Dream for All program, then you can't have owned a home for 7 years. Oh, neither could you of your mom or dad or anybody that you are related to. None of them. But so most down payment assistance program or first-time home buyer programs are saying you need to not have owned a home for 3 years. Now, here's something very important. Most of them are bullshit. There's only 2 real programs, Home Ready and Home Possible, 2 real programs that help you if you're a first-time home buyer. What people confuse is you think FHA at 3.5% down is only for first-time home buyers, and it's not. It's for primary residents that you don't already have an FHA loan on and you qualify. Answer that?
Yeah,
A
it's
little
pretty
long,
damn
a little
answer.
long, yeah.
But
Okay,
yeah, so
good.
3 years or 7 years or whatever.
Or whatever, but don't let it stop you. If you want to get a house, let's get you a house.
Yes. Can you put 5% down on a price of $126,000?
That's 1.26 million.
$1.26 million?
Probably not. Yeah, probably not. Abraham Torres, 9860. 9815 was gone. 14, 13.
I'm going to say yes.
Hold on.
If you're a vet.
Oh.
If you're a vet, guess what?
Oh.
Guess what the
shit.
loan limit
That
is
was
if you're a vet.
That was a trick question.
It was. Guess.
Yeah.
How much you have to put down? $2 million if you're a vet.
Out of $2 million if you're a vet, zero.
What about 3?
Zero.
What about 1.26?
Zero.
What about 9?
Well, you have to put down, you don't have to put, and you can put 0 down, but you can't put 5. So, can you put 5%? Yes, you can. Now, if you're going with a regular jumbo loan or a high balance loan, no, I would say conventional conforming, but 1.26 million breaks all conventional conforming limits across the country. I think the top is 1.1. I think it's 1.1. Yeah.
So
And-
Abraham Torres, if you want that,
Yep.
yeah, become a vet.
Yeah, no worries.
If you might already be a vet, who knows?
Cool.
John has 35 companies. We only work with lenders and probably realtors. 35. Is that 35 insurance companies that you work with? Because I'm going to assume you're a broker.
Yep.
Carlos Gonzalez, do you think getting a degree in finance helps a real estate agent? It could.
It could help you, but you know what helps you more? Being a nice guy, talking to people, and learning how to be a shrewd businessman. Because real estate is by far a people business. It's not a, how smart am I business? I know idiot realtors who make a lot of money, but they know how to send somebody to the right broker for the right question. I really It's not about how smart you are in the real estate agent side. It's a sales job. Loan is a little bit different. You do have to be kind of smart to be a loan officer. You don't have to be super genius, but you have to be pretty smart to be a loan officer, but you still need that sales capacity. If you can't sell, you will starve out. I see people starving out all the time.
All right. VL Pitts, Carlos Gonzalez, Lala Bukarar. Thank you for the
follows.
love.
Thank you very much for following us. We appreciate you very much. We are on Facebook, TikTok, Instagram, and YouTube.
How long do you have to be at a job to qualify? My son finishes nursing school in May and wants to buy.
The minute he has a job, V Pitts, as long as he got a certificate or a degree in nursing, good to go. It's one of my favorites. Yeah, one of my favorites. In California, San Bernardino, where I work, Riverside County, San Bernardino County, nurses can get a job. RNs can get a job at $130,000 to $150,000 to $150,000 a year. Crazy money, crazy money, crazy money. And they come out with that degree, and I can put them in a house right away. Done it a lot of times.
Azadib, may you go over the fees associated with the purchase of a home?
Sure, you ready?
Good questions, Azadib.
Azadib, yeah, we dig you, man. So, what are the appraisal?
Closing costs.
Let's go with appraisal.
Okay, so these are closing costs.
Okay, appraisal.
Okay.
Keep going.
Escrow.
Title insurance.
Notary.
Buyer insurance. Lenders insurance. Lenders title insurance. Lenders titles insurance. Buyer's title insurance.
But you don't pay for all of them. They're just they're associated.
Yeah.
Okay, so as Adib, you confused me because he's going with all the fees that are included. Are you asking that a buyer would pay?
Yeah.
Or that just all the fees that exist?
Because we'll fry your brain on the internet now, or we can just tell you it's between $6,000 and $10,000, and that's easy. And you're like, $6,000 and $10,000. Well, where does that go? And I'm going to tell you, well, part of it's going to be your appraisal, and then part of it's going to be your property taxes. Wait, what do you mean I got to pay my property taxes? Well, depending on the month you close, you might have to pay 5 months in advance of property taxes. Well, wait a minute. Why do I have to pay that? Well, because that's the way property taxes work, and that's going to be a closing cost. It will be paid on your behalf, but it's built into the escrow account for the lender. So,
got a lot of questions out there, guys. We'll get to all of you. Just give us a minute, okay?
We're trying to get to you guys. We're trying to answer all your questions. So there's a lot of fees associated with the purchase of a home. Next question is, do you have to pay them? They have to be paid, but you don't have to pay them. You can say, hey, Mr. Seller, I'll give you full price of $500,000 if you pay all the closing costs. Does that happen? All the time. It happens all the time.
Chris Perez, what about 651? I think that's FICO?
Area code 651. We finance 651 if it's an area code in the United States, but if it's a FICO score, it's not bad. It's not great, but it's not bad. I mean, great is 800 and above. Qualifying is 580 for FHA, 620 for Fannie Mae and Freddie Mac. You can get into most of the down payment assistance programs at 640. Some of them require a 660. So, not bad, not great.
Yeah, but it'll get you into a house. That's
absolutely.
For sure. Laguna Express, Lechuga Express, bro. Any programs in Texas?
Bro.
What's Texas?
Yeah, there's some in Texas.
North Texas or South Texas?
I love Texas. Yeah, there's some in Texas.
East Texas or West Texas?
Dude, that's a big Texas.
Central Texas?
Texas, you can start it one day, go here, try and drive across the state. You ain't gonna make it.
You better go night-night.
You going night-night somewhere in there. Yeah, you ain't gonna make it. Nope. Yes, there's a lot of down payment assistance programs in Texas. They're county-driven in Texas. There's some that are basic, but most of them are county-driven. Like I'm in Travis County. There's a bunch of counties. There's a bunch of programs in Travis County. So, yes.
All right. Devin Rios, rate on a $500,000 FHA 680 credit.
Devin Rios. Well, Devin, the only way we could give you your quote is if we pulled your credit, calculated your income, and assessed your assets and built your file. Then we can give you your quote. But we can tell you that New American Funding is telling people 5.75 15-year. If you don't believe me, go to the links at the top of our thing. Go to Cool Stuff, and then on Cool Stuff, you'll see today's mortgage rates, and boom, there you are.
All right, 20 mil. Ryan changed his goals. Yeah,
dude.
I love it, Ryan.
You were doing 1 mil for a long time. Now you're doing 20 million. Yes.
Well, he went from 1, then went to 10. They got scared, back down to 1. Now he's at 20. Good for you, man.
Million, yeah.
Freddie J. If I got a personal loan, can I still get approved for a mortgage loan?
Yes, Freddie.
Boom, dude.
No questions. Yeah, dude. That was an easy answer.
Dude,
Yes.
This is the new Lee. I love it.
Yes, dude. Yes.
I
Just
love
yes.
it.
Just
Truckin'
yes.
Dude 23.
Truckin'
In-laws
Dude.
are gifting us a house.
Okay.
Should have married that chick.
Yeah. What?
Loan amount on the house is $280. I'm a 1099. Need a bank statement. Why are they giving? Okay, help me.
So I think they're gifting him a house with the
Gift of equity.
with the note that's on there, and I think they want them to take it over. So I think he's saying, "Hey, listen, I need a bank statement loan in
No, he
order
doesn't.
to cover the $280,000."
No, he doesn't.
No, there's a lot of factors involved here, and
course.
I'm guessing a lot of pieces here because Truckin' Dude 23 didn't give us enough information
Actually, look
in
at-
this statement. Oh, hold on, here we go.
Got a question mark right there.
Can you help? Yeah, we can help. So there's a couple things. One, Truckin' Dude.
Yes, gift of equity.
Yes, gift of equity. So
No,
what's
it's
the
equality?
equality? FMV, fair market value. What's the fair market value? Once I know FMV and I know note, I can start to build the file even without knowing the rest.
House is in Corona.
FMV.
Dude, is that a $1
Corona.
million house?
Dude,
You about to
Corona?
get a $1 million house for 200 G's?
I know, Corona. What's the cheapest you can touch a house in Corona? 700?
8?
You think 8?
8.
800 G's?
Yeah.
Dude, 800 G's and you're getting it for 280? Steal. You got a great deal.
Yeah.
They're actually there's a term in the law called love and affection, and love and affection can be any amount. So if they gave you love and affection of $600,000, you better have Christmas dinner at your house.
Every
and
year.
You better buy,
Every year.
and it better be the good turkey, not the bullshit turkey.
And invite your loan guys.
Yeah, invite your loan guys. We're here to help you. Cool.
So Truckin' Dude, you're in a good spot.
Yeah.
Depending on...
We actually have one we're working on like this. Yeah, we're working on one just like this.
Oh, you're right.
And this might even be it.
No, he's buying in Laverne.
Okay, he's buying in Laverne.
Yeah.
Yeah, we got someone who's giving gift of equity. What's it like, 600 G's? No.
Well, the purchase price, the value is 7, but he's buying for 3.
So $400,000
Yeah.
gift of equity. So when we put the whole thing together, we actually find out fair market value, and then what the loan amount's going to be, and then we have to justify the difference, and we put love and affection, gift of equity.
There you go. So you got a good spot, Truckin' Dude. So
Yep.
time for a commercial.
Dude, if you need a badass loan, call Badass Loan Officer. Your badass loan officers are Chris and Lee at New American Funding. You can reach Chris and Lee by calling the phone numbers on your screen. Screenshot it because it's about to disappear through special effects. 3, 2, 1, bye. See our special effects?
Man, I'm getting better
That's
at
pretty
that.
good, yeah. Pretty good, yeah.
All right. So VL Pits. Any special rates or closing costs for nurses? Woo,
You take that.
Nursing programs.
You take that.
Nursing programs. So yes, we have a ton of programs that'll help you out with rates. A ton of programs that'll help you out with closing costs. Programs that'll even help you with down payment.
What?
Now know this. What a lot of people like to do is take that program and slap nurses program on it, and then take that off and slap doctor program on it, and then take that off and slap mechanic program on it, and then take that off and slap whatever you want on there.
Yeah.
So the answer is yes, we can help you with all. It's just marketing. We have the programs.
You're saying there's a chance.
Absolutely.
Okay.
Annette, is it a good idea to refinance a home to buy an investment property?
All in the math, Annette. It's all in the math. If it maths out, it's a great idea.
I was
If it
told there'd be
doesn't
no
math out, it's not a great idea.
What if you're not good at
There's
math?
a lot of math. There's a lot of math. Well, there's these guys that are selling these Section 8 houses, and they want them to debt service immediately. I can tell you that where we live in Riverside, San Bernardino County, live in Texas, and anywhere in these areas that are well populated, they do not math out immediately. However, if you go to a dilapidated part of the country where you can get a house for 80 grand, it maths out. It's just math. So if it maths out, do it. If it doesn't, don't think there's some mystical power that makes it work. It doesn't. It's just math.
There you go. USDA loans? LLO wants to know.
Yes, LLO. Yes. That was it.
I'm waiting for more, man. I'm not used to this. I'm loving it, though.
okay.
Okay, so Truckin' Dude said yes, gift of equity, million bones, told you. And he's crying, smiling. I
Yeah,
would be
dude,
too.
you better be doing Christmas dinner and Thanksgiving.
And right below that, Celso Luna says, that's better than my deal.
We're not gonna out anybody or
we're
anything,
not.
but no,
you guys both got
that's pretty
killer
badass.
deals.
Yeah, we like helping with those things. I wish I had someone who gave me $800,000 gifted. They're like, dear son, we love you so much. Here's 800 grand. Thank you, Mom. That's not my life.
Well,
Whatever.
Here's what's funny. When I first met Celso, I said, "Hey, man, what's the address on that property?" And he was like, "I'm not gonna tell you."
He's not gonna tell you.
But no, those are killer deals, guys. Killer deals.
Good
I'm
for
loving
you,
it.
man. I haven't seen that very often. When we see it, then we see dupe, just boom, right from the other. That's badass.
Yeah. Eastern Ohio
Both in California.
USDA making 90 Gs with 700 credit score. So yeah, we can do that. But
Maybe,
tell them
yeah.
about that though.
So USDA is a special program. It's a government program. So your government programs are VA, FHA, and USDA. Those are your straight government programs. The other ones are GSE. They're government-sponsored entity, which means the government gives them money so they have some kind of say in the underwriting guidelines. But USDA is straight government. However, the USDA loan is designed to help populate rural areas. And because of that, it is geographically driven. So you can't just pick a house and say, I want to use a USDA on that. You have to put the address at usda.gov, and it either is green and says, yes, we can do this, or it's red and says, no, you can't. So the property is geographically driven. If the property qualifies, New American Funding does have the ability to do USDA loans. We use an underwriting system called GUS. All loan officers use GUS for USDA, Government Underwriting System. So, yes, we can do it if the property qualifies.
All right, Trucker Dude, yes, Texas, we'll get you a buzz back, and we'll be all over it. Don't put the address here.
Yeah.
Do not put the address here, and then we'll figure it out, okay?
And we know we could do it. If you don't believe us, ask the people in the comments.
All right, Christopher Perez. Yeah, you know what Christopher Perez was? He was the husband to Selena.
Okay, all right.
How do you get rid of my ex-fiance off the title? I'm glad I finished that sentence.
Yeah.
What are the steps? Riverside County.
Yeah,
how do I get rid of my ex-fiance?
How do I get rid of that guy? How do I get rid of... It's Christopher. How do I get rid of her? I don't know. We're in California. How do I get rid of the ex-fiance? How do I get rid of him? Yeah, period. I don't know. Off the title, what are the steps? Okay, so if you're both on the title, here's some scary stuff. You're gonna need approval. Don't commit fraud. We never authorize you. We never condone. We don't in any way support you committing fraud, which means you have to get that person to sign off on getting off the title. Off the loan, you have to refinance them. There's two ways to do it. You can do a full-on refinance, or occasionally the lender will allow you to assume the loan, but you have to go through underwriting, just like you were doing a refinance. The only reason you would do that is you had a great interest rate. Let's say you had a 3%. You don't want to lose a 3% at a refinance at today's rate at 7.5. So you'd say, hey, Mr. Bank, I'd just like to assume this loan. They'll put you through underwriting. Some banks, not all. Some banks will put you through underwriting. They'll go, yeah, you know what? You could do this. Cool. We'll get her off. And then you just assume the loan. That can happen. It's not the norm. But just know that it's there. You're cutting out all loan officers at that point. But I don't give a shit. Don't use me. That's fine.
Okay, guys. Just a reminder about the Chris and Lee 123. If you have a problem with income, we have a program for you. If you have a problem with credit, we have a program for you. If you have a problem with down payment, we have a program for you. Those are the only 3 things you need to buy a house, and we have a program for all of them. Chris and Lee.
1, 2, 3. Boom. Yeah. 3 legs to loan. Income, credit, assets. That's it. Once I know those 3 things, I can qualify you for a loan.
Actually, you can tell us, and we'll tell you.
Yeah, I know. If you give me the income, credit, and assets, I'll tell you exactly where you stand. I don't believe your credit because I have to pull it, and everybody tells me, bro, trust me, trust me, bro. It's an 840. Oh, you don't even know it's an 840. It's an 840. I've only seen one 840 in my entire career. One.
There you go. What countries are hot with houses under 150K for investment outside of California? Or counties. Sorry.
Counties.
Well, counties are hot with houses under 150K. I don't know about counties, but I can tell you states. Like Ohio.
Ohio's one, yeah.
Ohio's huge.
Detroit has some.
Detroit?
Yeah, there's some it's kind of the middle of the middle of the United States, upper middle. But if you get to the coasts, forget it. If you're thinking you're walking in as an investor on the coasts, they're not going to debt service. They're not going to debt service.
Like I'm trying to buy a Newport.
Yeah, I want
investment property.
You got any $200,000 houses in Orange County?
No.
No.
I don't think the one exists at all. San Bernardino County, yeah, we'll find one.
200,000?
Somewhere maybe. You can go out
in San Bernardino County. Yeah.
In the county.
You can't even San Bernardino City. No, San Bernardino City. No. Even in the areas, it's 500 G's.
You still need to make $100,000 a year.
And be strapped.
And be strapped.
Yeah.
You have money for the house and a gat?
Yeah, you better have 2 gats.
Oh, husband and wife, you're
Yeah,
right.
yeah.
Right?
You need
And
2 gats,
depending
2
on how
income
old the kid
household.
is, maybe 3.
Yeah, maybe
It's
3.
like cell phones.
If he's over 6 years old, he needs a gat.
How many cell phones do you have? That's how many guns you need.
Yeah. Don't say you can say that, man. Gat. You don't know what
Gum?
gat.
Gum.
Dude, gum. That's
How many
right.
gums do you need?
Yeah, we chew gum every day.
Come on, man.
Okay, cool. Yeah, he does Altoids. Okay, cool. What do we got?
Freddie J. I like that. Freddie J.
I
It's
need
like
this
Willie
loan
D.
done ASAP. You know what
Got
you
it.
need to do? Get a hold of us, man. We'll
Got
get
it,
on
man.
it. We'll get on it tomorrow. We can make things happen really fast if you want to, but it's going to be on you. I'm going to tell you, hey, listen, we need all your documents within the next few hours. If you get them to me, we can go to work like right now.
Joe wants to know if they'll be able to get a second loan on 600.
600
I was hoping you would understand.
grand, 600 FICO, 600 acres.
I don't know.
I'm going to assume 600 FICO.
Acres, I like that.
Yeah. Second loan on 600. If it's a 600 FICO, pretty simple. Nah. No. Probably not. No. Because like all the programs open up at 620 other than FHA, which is going to be a primary. But even then, that's an ugly loan. People are like, hey, I qualify. I want my FHA. Like, I want my MTV. I want my FHA. I have a 581 FICO. I qualify. I know that for a fact. I'm like, no. I got to look at your credit. And if all of a sudden I see 16 derogatory things in the last 60 days, I don't care if it's 581, it won't qualify. Why? Because they're going to look at what your history is. If your history of payment sucks, they're not going to lend you money. Pretty simple.
You remember 1989 MTV?
MTV, I want my
1989 was the best MTV.
Headroom, Max Headroom?
That was the best.
No, cool.
What?
What?
Would it be able to get a second on the 600?
We just did that. We just did that.
Mortgage rates are going back to 7. That's crazy.
They are. They're probably going to go. Well, here's what's going to happen. For the next probably 6 to 8 weeks, you might hit 8s again. You might hit 8s because there's going to be, tomorrow is going to be a big, what is it, PC? Oh, shoot. It's the consumer.
CPI?
No, CPI is not it. It's the confidence. It's the confidence one. It's not the CPI. But it's confidence, consumer confidence. It's coming in tomorrow. If consumer confidence comes in low, that's good. If it comes in high, it's bad. It's really bad. And if it comes in high, the 10-year yield's going to respond, and the mortgage rate uncertainty is going to expand. We'll be back in the 8s. We'll be back in the 8s by Friday. If tomorrow's numbers come in bad. If they come in good, they might stabilize a little, but they're not going down until the Fed says, we anticipate an interest rate reduction. Remember, the reason it dropped about 4 weeks ago, is because the Fed said, we believe we've hit the peak of the economic cycle and things are looking good. And then all of a sudden, bam, 100 basis points like that.
Damn.
And then we're at 7.5 for most people, 7s. New American Funding was putting out 5.25 for a perfect loan. 5.25, crazy. And then CPI came in last week. Instead of at 2.9, it came in at 3.2%. And that rocked the world. The stock market dropped 560 points. Mortgage rates went up 50 to 100 basis points in 2 days. And then tomorrow's a big one. Tomorrow, we could either stabilize or skyrocket back up. It doesn't mean the whole economy is going to fail. It's the Fed's still going to reduce the interest rates 3 times. They haven't backed off that. They're just going to do it towards the end of the year, which I've always believed was going to happen anyway.
Assuming a loan. Della asks, if a buyer defaults on a loan, is the seller responsible for payments?
I got to think about that one. So if you subordinated and assumed the loan, if the buyer defaults, is the seller responsible for? No, seller sold it. That's pretty sad. I don't know why I got confused. The seller sold it. Yeah, it's like the seller sold it. Yeah, the buyer. If the buyer, yeah, if the buyer owns it now, and the bank, if you don't make the payments, the bank will foreclose on you.
There's only one issue that I see with assuming a loan, and that's on a VA. So, like, let's say Lee has a loan, and I assume it, and I default on it. It goes against your COE.
Yep.
Goes against your That's the only issue I see
Yep.
where it could affect somebody else. But other than that,
Yep.
the person who's assumed the loan is the one who's going to get the hits.
San Fernando Valley, yes. I don't know what that was, but I love San Fernando Valley.
Lee with the shirt.
Shirt heat here for you, Jay
You
Viss.
gotta stop, man.
Jay Viss.
You're the best. Madison Hargrave. What's the best accurate site showing your credit score?
None.
There it is.
None.
Boom.
None.
Say
Here's
it
why.
again.
Madison. The ones who show your credit, if they're trying to give it to you for free, there's a catch. There's always a catch. So if they're giving you your credit score for free, that's because they're collecting your data and selling it to the credit card companies, and they're going to try and sell you a credit card at some point in the future. If you're going after a home loan, we don't look at the credit card. I don't care what your credit score is for credit card purposes. I only care for mortgage purposes. So the only one who's going to give you an accurate pull is a licensed loan officer, and it's not going to be on a website. Nowhere.
Very next piece, VL Pitts says a good point. Have you noticed that Credit Karma scores are relatively low compared to True FICO? It's all BS.
Yeah, it's all bullshit,
I'm going to call it BS, but it's not accurate.
Yeah.
Lashi Marie. That's insane.
No,
What
he's
is?
insane.
His shirt?
You.
Or his breath?
What?
His attitude?
My attitude is a bit insane. I ain't
Okay,
gonna
we
lie.
found
Yeah.
it. We
I'm
found
not gonna lie. I ain't gonna lie. My
it.
attitude's a
We
little
found
insane.
it.
I am not normal. Does not play with elders.
He has a good head of hair.
Elders. I do.
Jenny Sinscore. The Fed rates does not manipulate the rates.
The Fed does nothing but manipulate the rates. Jenny, Senscord, that's their job. Their job is just to manipulate the rates and to try and control the economy. There's actually not just the rates. There's something called quantitative easing and quantitative tightening. I don't know if you know this, but if you study the current state of the economy, the Fed is pulling back in $90 billion a month. Pulling back in $90 billion to get control of the economy. That's it's called the M2. That's a smaller level than the M1, which is the interest rates. So when the Fed wants to, it needs to move the interest rates. It's no secret, though. They're trying to control the economy. They're trying to keep inflation intact. It's way out of whack. And they're worried about runaway inflation like happened in 1987. In 1987, the Fed started reducing rates a little too quickly, and interest rates spiked up to 18% for a while. And the economy could not survive at 18%. We had a gigantic crash, and then after many years, they fixed it. So the Fed is trying to figure out how the whole economy is, and based off of that, they control the prime. The prime is right now at 5.25 and 5.5. That is not the interest rates that mortgages are based off of. That's the secondary borrowing rate that the banks borrow from each other. It's a little complicated, but the mortgage rates are based off of the 10-year yield. The 10-year yield does respond to the market, and usually there's about 100 to 150 basis point spread between the 10-year yield and the current prevailing rates. But right now, because of uncertainty, it's gone up to about 200 basis points. Could go to 250 tomorrow.
Wow. Dang. Builder V, where's adjustable rates at? I haven't dabbled in adjustable rates in a while.
Yeah,
You know where
they're not that good.
Not competitive.
They're not competitive. You're better off with a fixed because everybody knows the reason you get an adjustable rate